Morning. My name's Healy. I'm with Motto Mortgage. My NMLS number is 659227, and just wanted to introduce you to Renovations. What you're seeing flashing on the screen is actually a renovation of a home that my daughter purchased. And her dilemma was that she got married, their apartment lease went up, and they had nowhere to go, so they moved in with us, and they decided to purchase a home. And in their search, they couldn't find anything that they liked in the school district or the street they wanted to be on. So it basically cut down their choices in what they could find and what they could afford. And most of the houses that were already renovated were either too expensive or they were actually in bidding wars. So I had mentioned to them about doing renovation financing, which they took us up on that, and they purchased the home for $287, did $150 in renovations, changed the layout, added 1,000 square feet on the back, and the house appraised for $460. So it's definitely a great program to get people in a house that they want to be in a neighborhood they want to be in, so on and so forth. So I will go ahead and continue with my other slideshow. If I can find it. Okay.
Are you going to send us the slideshow?
I'm sorry?
Are you going to send us the slideshow when you're done?
I can if you'd like it. Okay, it was prepared by one of our wholesalers. We are a broker, so we have several wholesalers that can offer this product. So that even opens it up even more if it's a qualifying's an issue, so on and so forth. So keep that in mind that this is not the only wholesaler, and different wholesalers are going to have different overlays.
Okay, so this is not the FHA program.
It is, we have FHA, and it's a good point. There are several different renovation programs, and I'll start with the first one. This probably you have come across. You put a contract in on a house. The appraiser comes out and says, I don't like the roof. It only has 2 years left. FHA says, well, we want 3 years. So obviously the pit comes in your stomach, and the seller is not going to pay for it. The buyer knew it was bad, and the buyer is going to pay for it, but they want to do it after they move in, obviously, because they don't want to crack the roof if the house doesn't go through for some other reason. That would be an escrow holdback, which a lot of lenders don't allow. We do have wholesalers that allow that. So what they do is so they can go to settlement, they put up 1.5 times the cost of the repair in an escrow account. And then as the repair is done, we would fund the contractor and then give them the difference back in cash. Okay, so if you run into that situation.
The buyer puts up that money?
Yes. Okay. The buyer has to put it up. If the seller does, it's an inducement to sale, which is illegal. Okay, so the buyer puts it up, and most buyers are okay with that because they knew they were going to have to do the repair anyway. Maybe a little bit sooner than they thought, but it's a great point, thank you. So they put up 1.5 times, the repair gets done, the contractor is funded, and then if there's anything left, the buyer obviously would get that money back. So don't let that be a deal stopper for you. I know like a lot of banks, because I've worked for banks in the past, they will not do that. And the reason they just don't want the hassle. But our lenders will do it, and it's really a good thing. Then there's FHA 203K, and FHA 203K has two options. One is limited, and one is standard. The limited is repairs from $5,000 to $35,000. The standard is repairs over $35,000. It's just a little bit easier to do the limited as far as underwriting and getting contracts, so on and so forth.
Perry,
okay?
Your slide didn't show.
So,
Put it on slideshow at the top.
Or do you get a, you got it.
so the 203K is FHA, is FHA financing, is 97.5%. You can actually go a little bit higher than that because they do allow a 10% contingency reserve to be added into the loan amount. Conventional goes up to 97%. You can, with conventional, you can finance a lot more, like luxury items, patios, swimming pools, decks, things like that. With FHA, you can be limited in what they'll let you do. Sometimes you can do appliances, sometimes you can't. Just depends on how the profile of the renovation looks. The beautiful thing is with these loans is that you don't have to do a full renovation. You can just do minor renovations such as maybe a new bathroom, a new kitchen. And you can do major renovations such as an addition, changing the layout of the house. In my daughter's example, the old kitchen is now a mudroom. They added an addition on the back, which is now a new kitchen. And the photos that I was showing you before, the ones that are the full photos were the before, and the ones that are the appraisal photos are the after. Okay. You can do hardwood floors. You can do a new roof if you need to do a new roof on the house, and that's the only repair you're going to do. That's totally acceptable with the home renovations. The maximum loan amount is going to be $484,350, which is the county limit in most of this area. Go to 97% on conventional, 96.5% on FHA. Investment properties. Investor can purchase an investment property, do renovations up to 85%. Does anybody know how the appraised value is calculated? Okay, so.
It's based on the after renovation value.
Wow.
Correct.
Right.
Yes. Okay, so what they'll do is the appraiser will come in, get a value on the house, and then he or she will go through what the renovation is, what the contract is, and add those renovations to the sales price of the house. If it's an over improvement, obviously it's not going to appraise, we're going to take the lesser of the two. Okay? So you want to make sure of that. What stumbling blocks have you all seen with renovation? Has anybody done a renovation?
Just like we were talking, I just did one, I might have done the second one or gone down the path. But I would think in this market, if the properties are going under contract quickly, one of the roadblocks is going to be the seller. They're not going to want to accept a contract with a renovation loan thinking that it might take longer.
And that's a great point. When you're writing your offers, make sure that that renovation loan is in there and that the financing is in there correctly, so you don't get yourself in a situation where somebody's putting an offer in on a house and then it's accepted and then you're turning around doing renovation. You're going to need to do an addendum to make sure you put the financing in there. Okay?
I got a question about so when I did the renovation loan, it was years and years ago. All we had was the FHA addendum. Do they have a renovation loan specific addendum for financing now that protects you for the time periods that you need?
Well, you, on your financing addendum itself, you're stating the loan program. That's
Okay.
that's where you would put that.
Okay.
So yes, that way everybody is very clear as to what you're doing. And then you're gonna adjust your timelines,
Mm-hmm.
like your, like loan commitment and all of that, based on what that loan is gonna need.
Right.
Yeah, and your biggest timeline is going to be your appraisal timeline. If you have 15 days in there for the appraisal, that's probably not going to work.
The addendum, yeah, the financing addendum doesn't have the amount of days for appraisal.
Okay.
They don't have that.
Not yet. They
It used to
Yeah.
have it.
Our financing addendum doesn't have that in it.
Yeah, but it used to.
It used to,
Yeah,
but
it
it doesn't
used to.
now.
Doesn't now?
Yeah.
Okay.
Yeah.
Okay. So what you'll want to do is kind of put some fire under your buyers as far as getting things done. We know with a lot of buyers, we have trouble just getting documentation like bank statements and pay stubs. So we're really asking them to do a lot. But what they would need to do, as soon as they put that contract in and that offer is accepted, they want to talk to a contractor, and they may want to talk to a contractor prior to putting the offer in, so they know what they're doing and what they can and can't do as far as renovation. Because the contractor may be able to give them an idea that with what they want, it's going to be 10,000 or 50,000 or 100,000, whatever, in round numbers before they actually sit down and do the final calculations. And then make sure you check your comps and make sure that the neighborhood can support that value. And that was the beauty with my daughter's house, that there were enough comps in the area to support the value. Not necessarily on that street, but that street is a street that people are coming in, buying and doing renovations because it's their forever home, so to speak. So the other thing that they'll need is, that, in most cases, they're going to need a construction consultant. And it depends on what's being done. FHA requires it all the time. Conventional only requires it if it's structural. And they also want the contractor to be experienced with renovation loans so that they've done one or two before they get into it, so they know what they're dealing with.
Because there's additional paperwork that the contractor has to do, and contractors, while they may be good at what they do, are generally not good at paperwork.
They are, and that's why you want the consultant, because that'll fill in that gap and they'll do some of that for them, okay? And then the other thing with the contractors is that when you go to settlement, there's a pot of money that obviously goes to settle the sale, and then there's another pot of money that's sitting over here in the cookie jar. And the contractor goes to that cookie jar, so to speak, as we progress through it. So they're not getting paid for work that hasn't been done yet. They can ask for an advance for materials, and they have to be very specific in what they need and what they're buying with it, and show that they did purchase with it. But they're not going to be able to collect labor and profit until that actual phase is done. So what we do is during each phase, we set up 4 to 5 phases, and we do draw inspections. And what happens is the consultant gets with the appraiser, and the appraiser comes out and basically says, yes, it was done, it looks like these materials were used, so on and so forth. But you also have the county that's going to come in, and the county's going to issue permits and sign off on permits. So as the work gets done, the county's signing off, the consultant's signing off, and the appraiser's signing off that the work was done. The contractor is then paid for that phase.
Do you guys have a list of FHA 203K consultants and contractors?
I have access, I don't have the actual list,
Okay.
but I have a gentleman that actually works for one of the home inspection companies that has been in here and done presentations.
Fox.
Yes, and he does FHA 203K draw inspections, as they're called, throughout the process.
Okay.
Okay. So in reality, a lot of agents don't like the process because one, they think they don't get paid till the project is completed, and that's false. They get paid at closing on the sale of the house, obviously not on the renovation, because that's not part of the sale. Renovations take too long, we can turn them in 30 days.
There's a time limit to the renovation.
Pardon me?
There's a time limit to the renovation time, too.
Yes, there is.
Is it 60 or 90 days?
As far as the work being completed,
Uh-huh.
depends on the extent of it. Most of them will go out 9 months. I know my daughter's took 7 or 8 months.
I don't think FHA goes out that far.
It depends on how much we're doing,
Okay.
okay?
Well, what your daughter did was a full blown.
She did a full renovation, she didn't do a tear down, and tear downs are not allowed in a renovation. So you find that nice little home on an acre of land out in, the country somewhere, and the guy says, I want to level it, that becomes a construction perm loan. Okay, they can't level it, the structure has to remain. It can grow, but it can't be leveled on a renovation. That's where we get into construction perm, which we also do offer, by the way. Okay.
The conventional product you were talking about was that, is 203K doesn't do investors. They have to use
Correct.
Conventional, right?
Conventional does investors up to
And is that
85%.
Home smart, home style,
Home style
home style? Okay.
is the conventional renovation loan.
Okay.
Okay? The other thing is that after you close, you're finished. The only thing you're gonna do is keep in contact like you do with all your clients. Obviously, they may say something to you, and you're more than welcome to call the lender or whatever, to express any concerns they may have if they haven't addressed it with the lender. But they're not gonna be calling you because the construction's delayed for whatever reason. Okay, because you're finished, you've done your part as their agent. But the biggest beauty of it is that you have drugged somebody around for months, can't find a house, and every house that they find on the street they want, the school system they want, it needs some type of work. Don't let that buyer walk away. Suggest to them that this product is out there, because we can do, with conventional, there's really no minimum. With FHA, the minimum is $5,000. Okay?
Do you have a list of contractors that are
I
familiar
don't.
with this? Okay.
The thing to do is to have the buyer call different contractors and find out, one, if they've done renovation. Two, if they're gonna charge a fee. You and I were talking about that earlier. Some contractors now, because they're so busy, are charging a huge fee to come out and just give a price. But there's a lot of contractors that are not, okay? So, and that's why you have your consultant involved as well, because they can steer you toward different contractors, whatever, that they've worked with in the past, so they're familiar with renovation. Does that answer the question?
But as long as they're NHIC licensed, they can do the work.
Correct. Yeah, I mean, any contractor would have to be licensed. In FHA, they do have to go through an approval process, and they do as well with conventional, but it's a 2-page form that we help them fill out, and it just talks about their experience. They're gonna want some financials to make sure that they're solid, that they're not gonna, pocket the first draw and run off to California or something, so.
And they have to be insured and bonded, correct?
Yes,
So they
yes.
have to provide all of that.
Yes, they'll provide licensing, insurance, bond, so on and so forth. Just like you would if you were having them come in and do something in your house, to make sure that everything's on the up and up. I think I mentioned the limit for home style is there is no minimum, there is no maximum, as long as the cost of the repairs are less than 75% of the completed value. Okay, so that gives them quite a bit of room to work with. With FHA, it's limited to maximum. The limited program is maximum $35,000 in renovation. The FHA standard is unlimited. Like I said, they can add the 10% contingency into the loan amount. Borrower cannot work for or be related to the contractor. Keep that in mind. Just like they would be, with most real estate sales with family involvement. So they would have to use an outside contractor. You can't there's no self-builds on either program. The work has to be done by a licensed contractor. Okay. Again, we talked about consultants. In conventional, it's not required unless it's structural or if the contractor has no renovation experience. On FHA, it's always required. To me, it's just probably a good practice to have a construction consultant involved, so you have another party involved and another set of eyes and ears, so on and so forth, to help you through the process.
I didn't think a consultant was required unless it was a full loan.
On
FHA?
FHA, at least with this lender, it may be their overlay, that they require a consultant on all FHA 203Ks, whether limited or full.
Now, you're talking your wholesale lenders, so your interest rate is higher than a typical FHA?
No. The interest rate on a renovation loan
Is a little higher.
is going to be a little bit higher, but because we're dealing with wholesalers, we actually will probably have better pricing than most of your banks and direct lenders. Okay? And I think that's some of the things people look at brokers and think that we charge higher rates. Our rates are actually better in most cases. I worked for a bank for 17 years, and our rates here either meet or beat those on a daily basis, no matter what the program is.
I guess I was thinking of your hard money guys who,
Yeah, no, hard money would be really high. So appraisals, again, are going to look at what the neighborhood's going to handle, what the values are, how the sales are going, just like a regular appraisal. And we will go off of the cost of renovation, plus the purchase price of the house, or appraised value, whichever is less.
how do they choose the appraisers?
How do they? Same way we would on any purchase.
Are they going through the asset managers, through the
the
management companies?
appraisal
Or do you
management.
have a rotation of local?
They
appraisers?
go through the appraisal management company. Every appraiser rotation has to go through an appraisal management company.
Okay, so you could end up with an appraiser from God knows where.
It could be, unfortunately, but that's the way it is everywhere now. You can't pick appraisers. And
That's not true. There are lenders who have a rotation of local appraisers that they use, unless something's changed that I'm not aware of.
I'm not aware of that. I know, like, when I worked for the bank, we had to go through an appraisal management company. We could have no knowledge or relationship or anything with any appraiser. But I'm not sure. Maybe some lenders do. I don't know. Okay. So the property types, 1 to 4 family properties, PUDs, site condos, townhouse, row home, in some cases log or dome homes, modular homes, can all be eligible. We just have to look at each on an individual case basis and see. If it's a regular condo, we cannot do a renovation loan for 203K. 203K, again, owner-occupied, primary residence. Individual, eligible bars are individual only, no co-signers. I think with FHA, they can have a co-signer. So that's pretty much with the FHA. The home style, again, we can go to 97% on a 1 unit, 90% on a second home, 85% on investment. I thought that was interesting that we go as high as 85% on a purchase of a 1 unit investment property, which is pretty impressive. If you deal with investors, most of the properties that they're going to buy are going to probably be flips. So kind of keep that in mind with any flipping standards and whatever, and so on and so forth. So again, the bars can't be related to the contractor. Qualifying ratios are going to be standard qualifying ratios, basically whatever AUS will tolerate. But keep in mind that you're going to want to, it's going to have to be 50% or under, okay? FHA, I've seen go a little bit higher, but we would just follow what their findings are. All the renovation loans are going to require 10% contingency reserve, and that's just to cover any cost overruns that may occur. I did this worksheet that we have to fill out, just to give you an example of, and it's not in your folder, of what a standard worksheet would look like. And this is for a 97, or 95% purchase, $250,000 sales price with $120,000 in renovations. Okay. But we would fill this out, and it just shows you the maximum loan amount that we could do. In that case, we could do 365. But I think that 75% kind of worries people because they think that that the house has to appraise for 75%, but the renovation costs can only be 75% of the full appraised value upon completion. Okay? Any questions?
So, thinking back to your daughter's home, that sounds like it was more than 75% there, wasn't it?
75% of appraised value.
Okay.
So it appraised for 460, and they put in 150.
Okay. Whatever those percentages are.
So.
Well, obviously, they had to be right ones,
I
otherwise
guess.
they wouldn't have done
I
it.
guess, yeah.
So that would be 32%. And that's why, because it sounds, the 75% sounds low, and it's confusing, but it's off of appraised value. And just the cost of renovation, not the cost of renovation and purchase.
Right, so maybe I'm probably having math issues.
I might be too, I'm using my cell phone.
Well, so the if her appraised value and then her renovation costs were 32%, 75% of value would leave you 25% for renovation costs, right?
No, her renovations were 150,
Right,
and her appraised value was 460.
right, and you said that was 32%.
So that's 32%.
So for a $400,000 house, you could spend up to $300,000 in renovations, 75%.
Pretty much,
75.
yes.
So, okay, so it's not the, okay, so it's 75% of, it's a $100,000 house, you could put,
75.
If it appraised for 100,000, you could put 75 in renovations.
yeah, okay.
Okay.
Doing it.
And don't feel bad, because every renovation class I've been in, it trips up every loan officer. So, because you're thinking of purchase value and not fully renovated value. Make sense?
Oh, yeah.
Okay. Any other questions? All righty, well, thank you.
Thanks, Terry.
Thank you.
Interesting, thank you very much.
I hope it was helpful.